is the runner of Green Title and has done just a tremendous job of building that department as being something that is really of high value to all of us. We personally use Green Title exclusively, even when, and this is an issue that I had not really thought to talk about, but a lot of buyer representatives, sellers are now saying within their listings, we prefer X title company, but it's not absolutely required. So I don't know how many of you do that yourselves and state Green Title. We're now doing that with stating Green Title, but there's no requirement that somebody actually does it. But we exclusively use Green Title whenever we have a choice. So
yeah,
they've done some amazing things for us. And I think the best thing you can say about a title company is that they just do what they do, and then you show up and sign, and your clients show up, and everybody feels good about what they're doing, and you don't have a lot of misunderstandings. And I think they do a great job of doing that. So I wanted Nate to talk to you guys about basic title, what title is, what escrow is, what the difference is, how those two things tie together, what are the things that you look for, and then we'll ask questions in between. So I told them all they each had to have a question for you, Nate.
okay, yeah.
So you can take it and go from here.
Yeah, sounds good. Yeah, that's kind of how I saw this kind of play out is I got a few things I'll touch on, but we can get to the point where we just kind of ask questions and just have a discussion about stuff that you guys want to know about title insurance. First off, with the whole COVID thing and not everybody kind of getting together, I recognize a lot of names on here, but we really haven't met face to face since you guys have either joined Better Homes and Gardens or have become newly licensed. So I guess first off, just welcome to Better Homes and Gardens, and look forward to working with you guys in the future. I'm Nate Yeager with Green Title. Just a little bit about our title company. Obviously, you guys probably know, but typically any real estate broker here in town, they have their own kind of separate business that is a title company. So obviously, Green Title is what is to Better Homes and Gardens Real Estate. Our main office is here out at Lakeside, and we have 1, 2, 3, 4. So we're up to about 11 employees now. 6 of us are here at Lakeside, and then we also office 2 closers that are down in our Papillion office that kind of handle that Sarpy County. Those agents, they're kind of assigned to them to help them close out their files. And so while we office out of Lakeside, we're able to handle closings, basically anywhere, Council Bluffs, the Dundee office, Indian Hills. So any file that comes over to us, we have no trouble traveling to those files to close them. I know some title companies now are still kind of in either a drive-up phase or just closing at one certain location, but we're able to kind of go out and close wherever. So just know that. When everybody has contracts that get turned in, we are all set up on .loop. So when you guys have purchase agreements that you guys have in place, in order for us to know that that's out there, you guys can share your loop with either myself or we do have an orders email that's associated with .loop. So it's orders@greentitleomaha.com. So if you guys ever have contract items that you want to share with us, that's the best way to do it. I know Better Homes and Gardens, they have some admins that review purchase agreements when you guys have those in place, but they don't necessarily share that with us. So that's just one thing to keep in mind is when you guys have new contracts come through, that you would share that contract in .loop with us. And then with the earnest deposits, that's kind of one thing I wanted to touch on, which we kind of just talked about. But a convenient way that we just set up is an earnest deposit transfer that buyers could actually go to our website and they can select its pay earnest deposit link. And basically what that is buyers will submit their information in that link and the amount that they want to transfer. And essentially what it is just the ACH transfer. So once we get their request, then we'll request those funds from their bank. And then once we request that, we're able to send a receipt of deposit out to everybody. But then it's going to take about 2 to 3 days before the client actually see those funds pull from their account, which would be the same way as a personal check. So if somebody gives a personal check to us, the same process for that is still 2 to 3 business days, typically before those funds actually leave the account. And so that has been super popular. I know that has cut down a lot of time for agents to collect those deposits and either run them out to our office or have it go through the courier system. So that's definitely a huge benefit when those get entered.
What about if somebody brings cash?
You know, we can accept cash. That's not the best way to do it because ultimately what's going to happen, typically when a buyer is financing the transaction, so they're taking out a loan to buy the house, a lot of times that lender is going to have to source where those funds come from. And so it's hard to source cash, whereas a check, the lender can obviously see where those funds are coming from. So while we can take it, it may just run into a little bit of issues down the road for that not to being able to be applied as a credit on the statement because the lender wouldn't necessarily allow that.
Okay.
That's a good question. We don't have a lot of cash, but every now and then we do. And then as part of our website too, Green Tittle, we have an app that's on there. So, you know, when you guys are working with buyers doing cost sheets or even sellers working with cost sheets, Green Tittle, we have a resource link on our website, which you can click on to get the cost of our title insurance premium for your cost sheets. But we also have rolled out at the beginning of the year a Green Tittle app, and it's actually really cool. I know it's used by a lot of other brokers or title companies in the area too, but it's pretty beneficial in the fact that it gives you a ton of other calculators that you guys could use, not only just doing cost sheets for estimates, but it gives like a bunch of loan payment breakdowns, amortization schedules, all kinds of stuff. So it's a really cool app to use. So highly recommend going on our website, and you can download that to iPhone, Android, all that. So has anybody had any questions in regards to how maybe you guys would share contracts, the mechanics of any of that you've experienced that you may have had questions on? It may be hard to take a question and answer on this, but
Nate, I was going to say, oh, I'm sorry.
go ahead. Hey,
I was
Katie.
gonna say, when I started, Green Tittle wasn't doing the ACH transfer. Is that correct? Like, is that relatively newer?
I think we probably started that maybe towards the middle of last year, maybe like early fall.
It is so slick. So I just wanted to say that is really nice. That's amazing.
Nice. Yeah.
To have
Thanks.
that. So that's worked really well. I think my question kind of stems from, as far as just like from a realtor standpoint, what do you need from us in order just to help everything go smoothly? Like, are there any specific things that we need to do in order to help move things along?
You know, so when we, you know, the main thing is just getting the purchase contract to us right when that's entered. That would be the main thing, because then at least we can get it and get our file started. So probably one of the areas where we would maybe run into an issue is, say, for example, if you guys get a purchase agreement put together and, you know, there's even instances sometimes where maybe an earnest deposit forgets to get turned in for whatever reason. But if we weren't shared the contract and then we're also don't have any sort of earnest deposit to process, it's probably going to be 2 weeks into the transaction where we didn't know that that was going on. And so now we get it kind of 2 weeks into the process and closing is now 2 weeks away. And then we're kind of having to rush our side. And obviously then if there's title issues, that just gives us kind of less time to figure out. But main thing is when contracts get entered is just to share those with us right away so we can just get our file started. And obviously then if you guys aren't getting any sort of communication from us about the file being opened and it seems kind of quiet, that would maybe be a good time to just double check back with us just to make sure that.
Hey, Nate, to add on to Katie's question, once we send the PA, the purchase agreement to you, you have that. Are there things that you want us to say, hey, pay attention to this particular thing? It's kind of a weird thing that we need you to look at.
Yeah, that's always a good thing to send, to provide us with information that may be useful to us, that's going to help us. Probably the one thing is, so when, as a buyer's agent, when you're turning in a purchase agreement, there's a couple things with that. So if the buyers aren't in town or they aren't going to be in Omaha for closing, that may be a good time to share then, that we may have to arrange some sort of mail out closing to wherever they're at. That's usually a pretty easy process to do, so that's not a huge concern, but it would be good to just have our file noted so that we at least know that we're going to have to arrange that, because sometimes a lender has to get their site done a little bit early too to account for a signing that's going to
explain to them what that looks like for, because I know for us, we do a lot of out of state buyers, and they'll always say, well, how are we gonna sign? What is it that we should be telling them about what you're going to do for us? I just say Title's going to help you with that.
Yeah, right. Well, and so cash deals, if you have a cash buyer, then it's super easy because we can do everything electronically. With a buyer that's financing and there's going to be a loan involved, then we get lender docs that have to get signed. And so they're kind of regulated by the government in how their loan closing paperwork is set up and signed. And so they're still a part of signing that with an actual signature. And some of their documents need notarized as well. So if that's the case, then we're hiring wherever the borrowers would be. There's going to be mobile notaries in that area usually. And so we're basically hiring a mobile notary to go meet them somewhere to sign. Typically it could be at their house, place of work. They're pretty, they can usually meet anywhere. But typically we're having them sign a couple days prior to closing to get their documents executed. And then those documents then get overnighted to us so that on the closing day, we would have everything back signed for closing of the files.
Okay.
Another one too, a good heads up on. So if you have buyers that are maybe going through a divorce process at the moment and maybe aren't quite fully divorced, at that time that they're buying, they would technically still be husband and wife. So if you ever kind of run into that instance where, say, Mrs. Buyer is going to go out and buy a house by herself, but she's still technically legally married. When she's financing the transaction to buy that house, there's going to be some spousal documents on the lender side that the soon-to-be ex-spouse is going to be required to sign. And so if you know that that's coming through, obviously reach out to us as a resource just for advice, but we run into it quite a bit where they get a contract going to buy a house, we get a week before closing, and then it's kind of a rush to figure out, okay, well, Mr. Buyer had to sign, but nobody was kind of aware of that. The bank didn't tell the borrower that. And so now it's kind of a stressful situation of getting that ex-spouse to come in and sign some of those documents. So that would be kind of another thing to your point. If you have that right as the contract's turned in, to just let us know so that we can kind of help facilitate that as you go.
Nate, kind of on that same vein, on the new purchase agreement, are you able to kind of give a overview of the difference between married individuals and a married couple?
Yeah, is that towards the end there where they, I just saw that on the new purchase agreement here a couple weeks ago, and I was like, oh, that's kind of new.
Yeah,
I
it's
was
under
gonna,
the names for the deed,
yeah,
page 8.
I'm gonna look here. I can't find it at the moment. So there's a box that says married individual.
So there's the
Or-
couple, the boxes are either single individuals, married individuals, a married couple, or other.
Gotcha. So I think the married individual, what that would mean is, so say if, say two brothers were buying a house together, and those two brothers were married. So that would mean, you know, brother one is a married person, brother two is a married person. So if they were taking out a loan to buy the house, most likely what's going to be required is both of their spouses are going to have to sign some of the documents for the loan.
Gotcha.
But yeah, that's what that would be.
Thank you.
Yeah.
I
Yeah.
mean, that was a good question, Kathy.
Yeah.
Can I ask a question kind of going along with that?
Yeah.
So I have a buyer right now. They're married. Her husband is self-employed and he's not on any of the loan. The lender could only use her income.
Yeah.
So he won't sign any of the contract. I understand that. But on the deed portion of that, for her name is Cindy, would I put married individual? Then I'm thinking married individual, right? Sorry to put you on the spot with
Yeah,
that.
no. So
writing
that's actually a good question because we run into this a lot. So if we go back to kind of simplify that, is there's kind of two aspects of a real estate closing. So we have one aspect of, okay, who are going to be the owners of the property? You know, who's going to be the rightful people on title? So in your situation, there would be no problem having both parties as owners of the property. I'm guessing that that's probably what they would prefer. They would probably want to hold title to as joint tenants with rights of survivorship. That means if something were to happen to one party, then their interests would transfer to the spouse. And so for that piece of it, you know, we have them as the owner. What you're referring to as the borrower on the loan is just simply, so one of those people are going to go into an agreement with the lender in which they're going to agree to pay the loan back essentially. So in your case, Mrs. Buyer is going to be the borrower on the loan.
Mhm.
And so basically her obligation with that is she is just going to be the one that's legally obligated to pay the loan back. So there's kind of two separate things. We have the owners of the property, and then we have the person that's going to be borrowing the money to pay the loan back.
Got you. So that's
So
different. Okay. Yeah.
yeah, so in your case, you know, if they both want to be entitled, both want to be owners, I would have them both sign the purchase agreement because they're going to both be on the deed. And then Mrs. Buyer is just going to go into contract then with the lender in regards to paying the loan back. So that's how now they could have it though, where maybe Mr. Buyer doesn't want to be on title and he doesn't want to be an owner. So in that case, you know, as part of your purchase agreement, she would just be listed as the owner as a married person and she would sign your purchase agreement. Now with that though is once we get down to closing, since they're still legally married, regardless of if he's on title or not, he still has an interest in the property because he's married to her, his wife. So he has a marital interest. So when they get down to closing, they're both going to be required to sign some of that loan documentation. It essentially still has an interest in the property, even if he may or may not be entitled. I think that's where sometimes when I see contracts come through, I think there's kind of some confusion there in which, you know, they'll have one party as part of the purchase agreement because they are the ones that are going to be borrowing the loan. And so they'll just think that she's the only one that needs to sign just because she's on the loan. But that's not necessarily 100% accurate, because it's kind of two separate things of, okay, we have the actual owners of the property, and then we have the person who's obligated to pay the loan back. And so I would just always think about, okay, who do we want to be the actual owners of the property? Because regardless of who is responsible to repay the loan back, those two people still have the same ownership interest, regardless of if Mrs. Buyer is obligated to pay the loan back. So does that answer your question maybe a little bit?
That does. And I will
Okay.
call my transaction coordinator in Tittle today just to make sure that we're all on the same page with that.
Yeah. And we run into a lot of times too, where like a purchase agreement like that would be drafted and only Mrs. Buyer like signs the purchase agreement, but the names for deed has both husband and both wife and husband on the names for deed section. So when we get those contracts, we would actually require that Mr. Buyer also sign the purchase agreement. And the reason for that is, if you think about it, so if somebody was to put you in title to a property, that person should have the obligation to consent for, let's say, for example, me and my wife go into title. She signs the purchase agreement, but I don't sign the purchase agreement. Now, if we go on a deed together to both own the property, well, I didn't really consent to me to be on that deed. Maybe I didn't actually want to be on the owner of the property. So whoever is going to be on the deed and be an owner of the property, those two people should sign off and consent to that. So that's where we would require Mr. Buyer to sign the purchase.
Is not, can I add on to that with what my understanding is let's say that two people are going to purchase a house. One person's credit is kind of crappy, so you use the other person to do the purchase agreement. Then when it comes time to close on the house, the lender, I know, asks for the signature of the other spouse on the lending documents. And
Right.
then would that automatically, like with what you do, would the vesting in both the names happen, or does then there have to be a quit claim done? And then maybe you can explain a little bit about quit claims. Sorry about my dogs.
Oh, no problem.
And then explain about quit claims. Mute myself.
Yeah, so basically with real estate, how a property is conveyed from one person to another is with a deed. And so then that deed is what gets recorded in the public record that's going to transfer ownership of the property. And so what a quit claim deed is it's basically just a deed where the one person is signing their interest in the property to another person. So that could be done if somebody wants to put title into their LLC, or maybe they want to deed the property to a spouse. It's just a way to convey the property. Now, a warranty deed is what you guys see within your purchase agreements, that you select the box that the seller is going to provide a warranty deed to the buyer. What the warranty deed has that's different than a quit claim is that in the warranty, in the paragraph of the deed, that seller is actually signing that they warrant the title to the property and that they own the property free and clear, and that to them, there's no other interest in the property besides their interest. And so they are signing that deed, warranting that to the buyer. Within a quit claim deed, there is no warranty that they're attesting to, so to speak. That quit claim deed is just a deed that says, okay, I have interest in this property, whatever interest I have in it, I'm going to give it to you. So that's kind of where the quit claim deed is different from like a warranty. I forgot your other part of that question, Carol.
That was just that the first part had to do with do you at the point of the closing, do you then vest in both names, or is it separately that has to happen?
Yeah. So there's kind of two legal documents that get signed as part of a closing. We have the warranty deed. That is the deed that conveys the property from the seller to the purchaser. And then if the buyer is financing the transaction, the lender has what's called a deed of trust. Sometimes it can be referred to as a mortgage, but that is the deed of trust, or the legal document that the bank records against the property that uses the house as collateral for the lender. So the deed puts title into the buyer's name, and then the buyers have to sign a deed of trust for the lender, which basically authorizes the lender to put a lien against the property. And that's if the buyer were to fail to make the mortgage payments on the lender, to the lender, they can go back and foreclose on the property. So that deed of trust document that is signed, that is the document that usually requires marital interest. So, let's say Mrs. Buyer is the only one on the deed. Now she has to sign the deed of trust for the lender. Well, she's the owner of the property, but then her husband also has a marital interest in the property. So what the bank's going to require for them to do is she's going to have to sign the deed of trust, and he is also going to have to sign the deed of trust because there's kind of a marital interest. And so now if the lender in the future ever had to foreclose and take the property back, if husband and wife are living in that property, now the lender has legal right to kick them out essentially and take back the property because they both executed that deed of trust for the lender.
Okay.
So, but basically at that time, to kind of just fully answer your question, title companies are going to go by whatever the purchase agreement says. So as you guys are filling out your purchase agreements, it's always the best conversation to have is, okay, buyers, how do you want to hold title, and who wants to be in title, and just make sure that names for deed section is filled out, and whoever's on that names for deed section, they also execute that purchase agreement. And then that's where title companies will follow that direction. Title companies aren't going to necessarily make any changes to that unless there's some sort of an addendum or whatnot.
Okay, makes sense. Question, who's next with a question? You guys all had to come with a question, so. Scott, what's your question?
Well, I haven't crossed a lot of these bridges yet, so I guess
Yeah, hey Scott.
I don't really know what I don't know. But one thing that kind of comes to mind would be how long before, so say we get a closing date 40, 50, 60 days out, or whatever that number may be, how early before that date will the buyers actually need to know what they need to bring to the table?
Yeah, so yep. So part of our title and escrow, green title and escrow. So kind of the escrow portion of what we do is we are there to handle basically the terms of the purchase agreement. And so as part of that purchase agreement, what we're going to prepare is a closing statement that is going to list, the purchase price and then all of the fees associated with the transaction. And then there's going to be a final amount, a cash to close that the buyer is going to need to bring for closing. So typically there's kind of two parties that work together on that. So if the buyer is financing, then the title company is going to work right with the lender to prepare that closing statement. If it's a cash deal, then the title company should be able to prepare that, fairly quickly. It could be as early as maybe 2 weeks prior to closing, a week before closing, as long as everything's met as far as the title insurance requirements go and kind of everybody's ready to close. The title company will be able to provide you guys with the closing statement for that. If there's a lender involved, that kind of complicates things a little bit more. Typically, it's usually probably, I would say, 1 to 3 days prior to closing is when a lender is going to be fully ready to finalize that closing statement, and then they issue that to the customer. lenders have certain regulations that they have to follow on their lending guidelines. So there's this term called TRID, which is kind of the government's input on when banks, how banks need to disclose things to their consumer. And with TRID, there's this 3-day window in which a buyer has to receive notice of his closing statement, and then there has to be a 3-day waiting period before they can close. Typically now anymore, lenders are providing some sort of estimate, maybe a week, 2 weeks prior to that completes that TRID guideline. But then the final numbers aren't going to be completed until probably 1 to 2 days prior to closing.
Paul, did you have a burning question? Or one that's like not really burning, but just.
I don't, I've worked with them on a couple of deals, and I mean, they've been fantastic. So I guess my question would be, why are you so awesome?
Well, that's a good question.
Yeah, thanks, Paul. Yeah, we got one Friday, don't we? I appreciate that. The other thing that I was kind of going to go on, if nobody has any other questions, I was just going to kind of touch base on title insurance, kind of what is title insurance, just the general overview of what title insurance is. So, because I know, I'm guessing if I was a consumer and purchasing a house and I wasn't in the industry, I'm sure you guys get fielded questions of, okay, well, what is title insurance and do I really need it? Is it required? So title insurance is, I don't like the word insurance to use with it because it seems like, it's an insurance product and nobody really likes to buy insurance, really. So I usually like to convey it as, it's basically just kind of a guarantee that the property that you're going to be purchasing is you're going to be the sole owner and there's no other interest. So when we get a purchase agreement, we take who our sellers are, the property, and we go to the courthouse and we go through all of the deeds. We see who the owners of the property are, if there's any outstanding liens, and then we prepare a report that's provided, and that's what that title commitment is that we send out. And so that's going to give a ton of useful information. I know those things are probably hard to review as buyers, as agents, but if you guys kind of get the hang of how to review that, there's so much good information in there that shows, who the owners are, easements, covenants, all of those stuff that you guys probably aren't getting if, a property's listed and the MLS listing by the listing agent probably doesn't have a lot of that stuff. So that's kind of maybe another thing that we can go on in the future is kind of how to read a title commitment. But it's always good to review those once those get out. But one of the things that I kind of go back to as well is, when you're working with buyers, or even if you're working with sellers, they're entering into a purchase agreement in which they're looking to sell a house, they're looking to buy a house. Well, kind of one simple thing that I always kind of go back to is, okay, so is this person selling the house? Do they really have legal right to sell that house? The buyers, is there something on the buyer's side, if they're a company LLC, do these people really have the right to sign the purchase agreement to purchase this house? And so that's just kind of a thing where you look at it, you're like, okay, well, is this really legitimate? So the title company is going to get that purchase agreement and they're going to say, okay, these two sellers that signed the purchase agreement, should they have signed the purchase agreement? Do they have a right to sign the purchase agreement? So it's kind of just a simple aspect of, okay, do we really have an actual purchase agreement in which all the parties are accounted for? So that's what the title company is going to look at. They're going to make requirements if there's an ex-husband out there, an ex-spouse, maybe there's construction liens out there. So all of those things factor into cleaning the title up on a real estate transaction. We then prepare all the closing paperwork, the deeds that's going to convey the property. And then in the end is when we issue the insurance aspect of it So the buyers are going to get an owner's title policy in which ensures to them that there's no other outstanding interest in the property besides their ownership. If there happen to be some other interests out there, they're going to have a title insurer that's going to help protect them, fight, and defend their right in the property. So that's kind of this simple way to put title insurance. Do you guys have any questions from consumers that you guys get buyers, sellers about title insurance that you guys run across often?
What do you agents, this is a question to you, do you know how to explain to your clients the difference between basic and expanded title? Yes, yes. Everybody feel comfortable with that? Anything more that you need to know from Nate about that?
I think,
Like,
am I
what's the-
okay? Oh, sorry. I just had am I okay in just kind of keeping it simple where, you know, I had just watched Nate's ATA that he had done where pretty much expanded is pretty much the way we want to go just for the ultimate protection. Am I okay just kind of telling
Yeah.
them, you know, I want to keep you protected? So really, you know, we really recommend that expanded title coverage.
I think sometimes there's a problem with explaining what protected means. Nate, you have a couple of examples of what unprotected means?
Yeah, and you know, even being in title insurance, having to explain, well, one, explaining what title insurance is somewhat hard. And then two, and then you're trying to explain the difference between two policies, basic or expanded. And that's, you know, that's even harder. So I understand how that can be trying to do that. I would, to keep it as simple as possible when relaying that to consumers is what the expanded policy was put in place for is that when people bought property, you know, there was issues that arise more commonly than others, in which, you know, if you think about it, somebody moves in, maybe a fence is encroaching over a lot line. Maybe there was a construction lien filed after closing. Maybe there was issues with survey boundary items. So those types of things are kind of more common occurrences than, you know, if there was errors in the public record or if there was fraud within a transaction, maybe, you know, somebody was impersonating a seller and whatnot. So what the expanded policy was put in play for is to cover consumers for the more common things that happen within a real estate transaction. And so that would be your items of construction liens, mechanics liens, if there was issues with a survey, so encroachments, maybe the fence was built over, maybe there was landscaping built over, maybe there was a shed built over a lot line. So those were all kind of, maybe the house didn't conform to the covenants or restrictions that were filed against the property. So those are all kind of more common occurrences that could happen. And that's where the expanded policy was put into play. Whereas a basic policy wouldn't necessarily provide any protection for those items. So in short, the expanded policy is going to cover more common occurrences that seem to happen with real estate transactions and properties than a basic policy.
I think a lot of that comes into with more, not necessarily lacking in residential properties, but there's more chances in a rural property with more land of there being encroachments, easements, lot lines, things like that. When I first was in real estate, I got pulled into being a buyer's agent, got pulled into a lawsuit between my buyer and the seller of a 40-acre property that was out beyond other properties. So you had to go through these other pieces of land in order to get to the property that they bought at the back end of the land. And on the way, there were easements that had fences, gates on them. And the seller of the property had made a verbal agreement with a property owner along the way for an easement that had a locked gate. And that property exchanged hands without going on the market during our transaction, and the easement did not go with it. So our person who bought a 40-acre property with a big house on it went to move in and had no access to get in. And the person who had bought the property, the other property, said, fine, we'll give you an easement, but it's going to be $10,000. So
Right.
that was, and Tittle got involved and everybody got involved, and it took 2 years, and it was just horrible, but I learned a whole lot of lessons about questions, and that's why I'm asking you questions.
Yeah.
Is because those those things, remember when you took your test and you had to study for these things, and you're like, I'm never going to use this stuff, like, riparian rights and, all of those. Well, if it ever comes up and it's something that has to do with title, you always want to make sure you've got that title is insurance is expanded enough to cover those kinds of things. So.
Yeah, and the simple thing back to that, Carol, is if a buyer didn't have title insurance, say they didn't want to purchase title insurance, and they came across a problem like that, well, now they really have nobody in their court that's going to help try to fix the issue. So
Your own legal team.
Yeah, which is the title insurance. If they didn't have title insurance, well, now they're hiring a lawyer on their own dime to try to fix the issue.
Yeah. And insurance is insurance, whether we call it title or whatever we call it. Insurance is insurance. Insurance is hedging your bet and somebody's covering it. And it costs money to do that, even if you never make a claim. But if you do have to make a claim, it can be very, very expensive. So
yeah, and so like with newer agents working with clients, if there's questions that arise with title insurance, expanded basic, what is title insurance? We have some flyers. I think they were going to be put on the intranet for you guys, so they may be there. If you can't find them there, I have them here too as well. So just reach out to me, and those can be provided to you, and you guys can hand those to your clients if questions arise.
you don't ever want to be. This is my feeling about it, and you can agree or not agree with this, but you don't ever want to be the one that something happens and the buyer or the seller says, my agent didn't tell me that. You have to have proof that you've given them that information in some kind of way. And it helps to understand it too. So, we're just trying to, as I think Leslie says, keep you out of real estate jail. And so is Nate.
Yeah, that's a good place to stay out of.
One last question I want to ask you.
Yeah.
Preliminary title, everybody, we get a copy of that, like it says, okay, here's the prelim. What are they supposed to be looking for? And if there is something there, do you say, hey, make sure you pay attention to this one because we see a lien or something has to happen? Can you speak to that as a final thing?
Yep, absolutely. So, whether you're the buyer's agent or the seller's agent that's representing, the title commitment is important in both of those instances. As you're a listing agent working for a seller, when a title company provides you with the title commitment, there's going to be information on there and requirements on there that's going to have to be completed before the title company is going to be able to close on the property. So if you guys receive a title commitment and you notice that there's a lot on there and a lot of requirements on there, that's kind of a red flag that the sellers have some items to kind of work through. Anytime that you're dealing with sellers that are, maybe it's a divorce situation, or maybe there has been some sort of death with an owner, or if the property's in a trust. Those are all kind of things that complicate a transaction. And so if you are involved and have clients that are going through that as part of the closing, it is always best to just know that right when that title work's completed, is probably reach out to the title company and see, okay, what are the requirements, what's needing to be done. That way there's expectations kind of set as they move forward in the process. If there could possibly be delays or extra legwork, or maybe there needs to be an attorney that's hired for the seller to help resolve some of the issues. So that would be the main thing. Title companies appreciate, getting calls and getting questions asked too when title work's completed. So, I think that that's a sign of, a really good on top of it agent is when the title work gets sent out, is I'm getting a phone call and say, okay, I see the title work's completed. How's it look, or what needs to be done? That's a very good probably habit to kind of establish as you're getting forward, moving through, your real estate career, because that's ultimately going to help your clients. It's going to help things get closed, and it's going to help set expectations if things, are needed to get resolved.
Do you highlight those things that could be of needing further work, or do you make a call to them? So they know.
Absolutely. So, when we get transactions and we get title work completed, and we know that there's kind of some things that are off with it, or there's some extra requirements that we know are going to take some work, we're at that point letting everybody know of what's going on, and just making sure we're starting that process early. You're probably going to run into instances though where that isn't always the case. Maybe the title company doesn't relay that information. And that's probably the worst case scenario is, a week before closing is you're getting some kind of notice saying, okay, well, we're still working on these items, or this issue is still outstanding and it's not resolved. So at least initially was what we're trying to do is make sure everybody's kind of aware of what's going on.
Okay, any final questions to wrap this up? You guys have been great. I know you're probably completely worn down now after 2 hours.
Yeah, I bet. No kidding.
I had a couple questions.
Yeah, go ahead.
Well, one, just a note. I've tried to pull up the app and it's not pulling up. I don't know if that's a link from the website that's not working, but just FYI. Do all title companies, you have the online version, but do all title companies have some version of a 24-hour Dropbox that clients could just drop their earnest deposit off to, or do I need to look into each one when they come up?
So Green Title, we have a courier that runs to each office. So if you have a client that drops an earnest deposit off at the Dundee branch or at our Papillion office, we have a courier that would pick that up and bring us to Lakeside. So if you have that, you wouldn't necessarily always have to run it out to Lakeside. We could get it if you drop it off at another office. But as far as a 24-hour deal, I know Lakeside has a Dropbox in our front door. It's like a little slot that clients can put that in. And I'm assuming that the other offices have that, but I'm not 100% sure on that.
Okay.
Is that about all title companies, Kathy, or just?
Yeah, just if you happen to know in general, or Carol, maybe you would know more. So
I don't really know as the complete answer. I know some do and some don't.
okay.
Yeah. There's some smaller, less contemporary operating. How do I say?
Just check each one.
Yeah,
I wasn't sure if there was an overarching
one. That is why it is so important to be able to name the title company that your transaction is going to go through.
Well, and on that's kind of my other thing is so when the agent remarks say we strongly prefer this title company, or
I don't like that at all. I'm doing it, myself, but sometimes, but I don't like it because I feel like if I have a buyer and they have a really good offer, if they don't say, okay, fine, we'll give you your title company, that's going to be something they're rated on. And I don't think that that's the way that the decision-making process should take place.
But you do think some agents perhaps are taking that, because
Absolutely.
it's my understanding that they're not allowed to pick who the title company is, and in my eyes, that is them picking who the title company is.
They're
in this
not
sort of environment.
Allowed to pick, but there are like there's investors who like all of their stuff goes through one title company, and conveniently, because they're kind of complicated, it makes sense sometimes. But there are companies that there are companies and there are organizations who have ownership,
Right.
and it behooves them to make those decisions. I don't think it should be at the consumer's detriment.
Right. So when you're writing an offer, are you going with their title company if it's competitive right now, or no? No.
If they want to come back, if everything else is fine and that's a really super important thing to them, they want to come back, and our clients can make that. Most clients don't have a preference of a title company. It's really us. So yeah, it's a real slippery slope right now, and I hesitate to even have any language around it.
Right.
But yeah, I just don't think it should have something to do with whether a buyer's offer gets accepted or not. It's operating from fear, and I don't like that. Even though I prefer Green Title, because based on their competence and their credibility and their convenience, and I think they do a wonderful job, just like I would refer anybody. So yeah.
Yeah, there's kind of two things with that is, typically if you run across, if you guys are doing new construction, most of the time that builder is using a specific title company. So you'll run into a lot where on the buyer side, you'll have to use the builder's title company. The reason for that is that builder, prior to that house being built, that builder was paying some title insurance premium for like construction loan and construction financing. And so when that builder then turns around and sells it to the buyer, that builder is getting some title insurance credit that's legal to do from the previous title premium that he paid. So it would be not to the builder's benefit if another title company handled that, because they wouldn't necessarily be able to get that credit that they deserve to.
Yeah, and that's all in their profitability, and
Yeah.
like
The other thing too is if you run into an MLS or a listing in which they're choosing a specific title company, maybe there is some sort of title issue that was recognized even before they put it on the market. And maybe that title company has already done some pre-work to make sure those issues have been resolved. In which that case would be a benefit to you guys to use that title company.
Absolutely.
But that may be one, I don't know if you guys, this is more on the agent side, but maybe a question could be asked to the listing agent on what the reason for using that specific title company would be. And if they have a valid reason, then in order to get the deal together, I mean, I think that's what you do.
Exactly it. But if it's just, this is how we want to, like, constantly, there's certain agents that I know that they always say we prefer you use this company, and I know the reason, the reasons why, but to make that a term of the contract that's a do or die kind of term is can be iffy. So there are incredible reasons for doing it, and that one of them is when they've worked through some crap, like you're like, no, you don't want to pass that on and start that all over again, and with new construction. So thank you for that.
Another instance on that too is sometimes a title company will have a deal in which they've done a lot of work on for a purchase agreement that was put in place, and maybe that transaction falls through for whatever reason and cancels. Well, then a new purchase agreement's done with a new buyer. Sometimes I see a lot is they'll just bring that deal back to the title company that was handling it before, because they basically have done kind of everything
Yeah,
to get it done and closed. So that's another kind of instance too, where you could see that.
yeah. Okay, thanks, Nate. This was
Yep.
fantastic. Bryce,
Thanks,
Nate,
everyone. Please use us as a resource. Any questions that you guys have, that's kind of the main thing from a title company and our side is if you guys have anything come up, questions, we have seen it all, have dealt with it all. Even if it's contract stuff, we can still kind of answer some questions. So just know that you guys can use us for that more than just turning in a purchase agreement to us. So,
Exactly. And now you've had the introduction. There it is.
all
Okay,
right.
All right.
Sounds good. We hope to see you guys
Thank
soon.
you.
appreciate you.
All right. Yeah, bye.